Hello everyone, this is Dana from NexGen. Thank you for joining us for part 2 of Building the Family Bank. I hope you enjoyed part 1. Part 1 sets the mindset for building your family bank. The good news is that it's simple to do. Today I am going to share what I used to do and what I do now. When I talk about a bank, I am talking about a financial institution that receives money and gives loans. My experience has been with banks, credit unions, and finance companies. Today I deal with mostly banks and credit unions. As you can see, there are distinct differences between banks and credit unions. Each have their advantages and disadvantages. What they have in common is that they both have profit motives. The motives dictate how they conduct business. In this illustration, I will use the best of both instruments. My paycheck and now annuities are direct deposited into my checking account. I retired debt-free, so the monies are now applied to my utility bills, credit card, and money market. As you can see, there are other places to deposit your funds. There are also lending instruments. Until I knew better, I used all of these instruments, with the exception of the student loan. More on that later. When comparing the rates of the deposits and loans, you can see a drastic difference. In some cases, a 17% difference. These are the rates for the credit unions I use. The rates for the bank deposits are lower, and the rates for the lending instruments are much higher. While the rates for the deposits are the same for all depositors, the rates on loans are dependent upon a person's credit worthiness. In part 3, I will be discussing credit. As of the date of this video, these are the credit union rates. If you have seen my other videos and blogs, the goal is to pay your home off in less than 7 years if you have a mortgage, and to pay your credit cards off in full every month. I keep my automobiles for more than 10 years, and if I finance, I don't do it for more than 2%. Financial institutions not only make money on the interest they charge, they also charge fees. There are so many bank and credit union fees that I just decided to list a few here. Most, if not all of these fees can and should be avoided. Now that I have given you a brief overview of the financial institutions I use, I would like to give you my perspective on the advantages of a family bank. I did not discuss small business lending intentionally. I will be discussing that in a later video. Besides establishing generational wealth, having a family bank encourages financial literacy in the family. We meet regularly to discuss finances, and we go over our spend plans. When borrowing from the family bank, the growing principal balance is not affected. The processing time for lending usually takes 15 minutes, and that includes when the funds are available for use. The lending rates are lower, usually 6%. When processed a certain way, these loans can be reported to the credit bureaus. Thank you, and I look forward to seeing you in part 3, where I will be discussing credit. Don't forget to like, comment, share, and subscribe.